So retail stores are a big time trap. If my wife would have entered this store, she would have taken 30 minutes to do the shopping. But I can get in and out in 5 minutes. What is the reason for that? So I have a list on my phone. I follow that list. I just come in, grab stuff and go out. So I end up wasting very little time. Now this is the same type of theory that works out in finance also, or with money also, that there have been so many financial modern traps that have been laid out by people all around you. So it is very important to understand how to avoid these, and this is precisely what I'm going to speak about on this video. And also do check out our sponsors for today, which is Small Case, which is an excellent way of investing in the stock market. So point number one is that you must understand the financial deal that you are getting. So these days people give like extremely lucrative deal. If you're going to the real estate market or if you're investing with certain companies, they will help you weave like suhavne sapne. So I was speaking to a builder from North Goa and he said that, you know what, we are constructing like really nice properties, and properties were very nice, no doubt about that. So I asked him that, you know what, I want to buy like a 2 BHK. So tell me what would be the price. So he said 2.5 crores for a 2 BHK flat in Goa. So that really blew my mind, because according to me, the prices should not be that high. So I told him that, you know what, the math does not add up. Goa is not that expensive a market. So why are you selling it for 2.5 crores? He said that, you know what, I'll explain you the math. So here is the math. Do it with me. Every day that you do short-term rentals in Goa, you can make between 6 to 10,000 in that location. So the location was also very good. And assume only 50% occupancy of your house. Then how much yield you are making? So approximately, if we quickly run the math, so 6,000 times 180, and it will give you roughly 10 lakh rupee of rental income. So the yield comes out to be roughly 5 to 6%. I am doing mota math with you. So it made a lot of sense, because in major cities like Delhi or Mumbai, the rental yield is usually 3%. So if you are getting 6% yield for that property, anyone would get enticed. But this is how you get trapped, because when you are doing short-term rentals, you will lose at least 40-50% margin. So decrease that from your yield. On top of that, if you are buying from such builders, they will charge you management fees also. So I asked him that how much management / maintenance fee are you going to charge me? So I'm going to charge you like 8 to 10,000 per month on that flat. So now you tell me that if you run all these numbers, what the rental yield will come out to be. So it will come out to be exactly like Delhi and Mumbai. Now this is frequently happening with investment apps also, and a bunch of companies are running their offers that ye kar lo, wo kar lo, hamare sath account khola lo, and you are going to become like multi-millionaires. So please be aware about the type of financial deal that you are getting in the market, and do not get trapped just because someone is showing you a partial picture. The second key point is that we must understand how to budget. People unfortunately have made budgeting extremely complicated. This is one of the simplest finance concepts or personal finance concepts out there. Our grandparents, parents, everyone used to budget. Now unfortunately, with the use of excessive tools, spreadsheet bana lenge, Excel kar lenge, duniya bhar ki apps install kar lenge. So it is becoming harder and harder to budget. At least for majority of the people, there is something called as getting overwhelmed with things. For example, these days you might have noticed that you get overwhelmed with content. That you go on Netflix, so much content is available that you end up choosing nothing. You just scroll through and go away. So same is happening with budgeting, that people are really struggling to budget. So let me help you understand how you can budget properly, and let me explain 5 simple techniques. So technique number 1 is called as balanced budget formula, and it is called as the 50, 30 and 20 rule also. You might have heard it thousands of times that, you know what, you should have like 50% for your needs, 30% for your wants and 20% for your desires. This is very commonistic, and it is also a very boring formula. Most of the people do not follow it. What is the number 1 reason? Especially because of the fact that if you are just starting to earn, you would struggle doing this 50, 30, 20. For example, when I started my first job, I was getting paid like 10-12,000 rupees. I had no money at that point in time. So if I would have followed this formula, I would have deliberately failed, and I would have thought that, you know what, budgeting is nonsense. So for such people, using this 50, 30, 20 formula is pretty much nonsensical. What you should do is that you should adopt philosophy number 2 or method number 2, which is called as that if you save 0, you must save 1. Now what is the meaning of this? Well, it has a very simple meaning. So for example, let's say that currently your savings rate is 0%. Now what is your goal for next month? It is very simple, that just save 1% of your salary and try to add 1% to it every successive month. Now to what extent should you be doing it? You should at least hit a number of 20%. So that is the goal or vision with which you can start budgeting, and it will get you in the habit of budgeting and will make this entire exercise of budgeting more effective and enjoyable for you. Now comes the third technique of budgeting, and it is called as envelope budgeting. It works wonderfully well for people like me who usually want to spend money in cash. Now why do I prefer spending money in cash? Because it becomes very easy for you to track stuff. So I usually avoid paying money in plastic format or in UPI format simply because of the fact that once you see your money going out in hard cash format, it little bit hurts you. So what you need to do is that, for example, let's say that you have 4 prominent expenses in a month. So you buy an envelope. Now your total major kharcha for these 4 items would be 15,000. So you withdraw money from your ATM and you put it in an envelope and then give it. And this envelope budgeting gets you in a habit of spending cash, which I highly recommend rather than using plastic money. Now comes the fourth budgeting method, and this is for people who are doing reasonably well, who are making good money. Now for those people, they should value their time more rather than doing chinni pana with small stuff. So here I would recommend that you follow a big money versus small money budgeting method. So what happens here is that let's say that you are making really good money. For example, let's say 5 lakh rupees. Now you should only track your big expenses. Forget about like small expenses. So that segregation method is called as tracking big money and not worrying too much about small money. यार जाके retail store से कुछ खरीद लिया. So you don't need to put that on your Excel spreadsheet and waste your time. Fifth and final point is called as the fun money stage. So this happens when you have almost become an HNI. So for example, at my stage currently, what I simply do is that I have a 1% fun money rule. So basically whatever money I'm making in a month, I will take that 1% money out for fun activities and I tag it as fun money budget. So ideally you should move towards this stage where you do not even have to track or do anything with that fun money budget. Rest of the major expenses you continue to track. So the third point is that you must avoid debt in most circumstances and do not fall prey to the lucrative debt that is given out. For example, when I was purchasing this car, the salesperson called me up and said that, you know what, do you want a debt on your car? It will be an awesome deal for you. We will give you this rebate. We will give you that rebate. Why? The basic point that you must know is that car is an unproductive debt. Please do not take a debt on car or majority of the consumer items that you are buying. It is not useful at all. If you are taking debt to buy real estate, yes, there are offsetting benefits. There is interest rebate. You can claim ATC. So all these are basic points that you must understand. Now what ends up happening is that when you go and extend this logic to buying like consumer items, you go and speak with salesperson, they will convince you that taking a debt is awesome and you will fall into that trap. These days, so many people go and read it up online. What they are told is that, hey, you know what, that if you go and max out your credit cards, your credit score will improve, your CIBIL score will improve. No, this is complete nonsense. There is something called as credit utilization. For example, if you can, hypothetically speaking, take 1 lakh rupee of debt. Now you keep on maxing that limit of 1 lakh rupee, and even if you make regular payments, even then your CIBIL score will get hurt. So all these are complicated things. If you don't understand this game, generally just avoid taking debt. Now another related point here is that people often get confused that when they should be repaying their debt quickly, whether they should do it right now for the interest rates are high, and this calculation also becomes extremely complicated. So what is the simple rule that you need to follow here? It is this: just simply go and check what the interest rate history of India is, and you will generally get a sense whether right now in the economy interest rates are high or low. So for example, if you check it sitting in January of 2023, you will easily figure out that, hey, interest rates right now are very high. They are much higher than our target rate of inflation. So in a high interest rate environment, you must try to repay your debt as quickly as possible. Point number 4 is that you must avoid modern day mumbo jumbo. Now what do I mean by that? Let me outline that by giving you 2 examples. Many of us would have heard of buy now, pay later. And buy now, pay later, what happens is that you don't have the money, you buy stuff now and you figure out a way to pay later. It's a new way of getting you to spend more. Take a look at this chart, and what you will see is that in America, this concept has gone up by almost 46% in one single year. So the point is that people are actually doing this stuff. So then next 6 months, some new innovation will happen, and it is already happening. So what that innovation is, it is called as SNBL, save now, buy later. So this is another variant of it. Now 6 months after, some new stuff will happen. So the point is that there are a lot of companies that just innovate for the heck of innovating. So let me give you another example here. So there are a lot of fintech startups. What they do is that, you know what, Paisa, if you're going and buying some stuff, we will round it off and we will help you invest in some mutual fund. Now think about it this way, that fintech company is also making money, no? So you are paying one layer of commission to mutual fund. You are paying second layer of commission to that fintech company. So all this mumbo jumbo simply eats into your returns. You must get a basic financial understanding of what savings, investing is. Just execute that on your own. Try to start in a very simple way and complicate your systems over time. Alright, so point number 5 is that you must fill your emergency fund. Now this is like such an important advice, and people just believe it to be ubiquitous and true at every single juncture. No, this is a very interesting and important point that you must understand. It is not as if that you should continue to build your emergency fund irrespective of the environment. Yes, you must build an emergency fund, but then comes the choice whether you further build that emergency fund and a lot of it is dictated by economics. So for example, when the interest rates in the economy is close to 0%, and if you're going and doing fixed deposit, because most likely you are going to save your emergency fund either in liquid funds or in fixed deposits, you are going to get horrible returns. Right now, for example, sitting in 2023, FD rates are very, very high. Why? Because interest rates are very, very high. So now is a perfect time to build your emergency fund. So to cut the long story short, do not simply believe in axioms that are given that, you know what, just invest for long term, buy and forget. No, there are specific times when the common sense tells us and macroeconomy tells us to do certain things more and do certain things less. So you must time it. I'm not saying that try to time the market always, but when these indicators are right there in front of you, you must act accordingly as per data. Alright, so related to this, there is a very important market related point that you must try to time the market on certain occasions, especially in situations like 2023. Now, if you go study the commentary of Mr. Michael Burry, I had made a video earlier, I will link it below and you can check it out. If you study the commentary of any major macroeconomist or majority of investors, they all agree that 2023 will be a volatile year. Now, what does that mean? It simply means that markets are going to come down, they are going to go up. There is going to be a lot of range fluctuations. What does that mean for you? It means that you must study the market. There are points where you should be buying stocks. You should not become like hyper growth investor. कि किसी भी price में मुझे अच्छा stock दिला दो, I am going to buy that stock. Please don't do that. You will get trapped for probably another 2-3 years. It is very, very important to understand the concept of resistance and support and buy stuff accordingly. Similarly, if you are getting very good stocks at deep discounts, you must have the courage to build positions. Next point is that you must understand your profit margin and commissions on things where you are engaging. So every time you go make a deposit in a bank, or you go hire a broker, or you go and hire a PMS service guy, you go give your money to mutual fund agents or managers, you are losing some kind of commission. Please be very clear how much money you are going to make from a specific trade versus how much money are other people who are managing your money are going to make. So in this context, I received a LinkedIn message from a person. He said that, you know what, I've burned a lot of my money investing in the stock market. I want your help. Can you please manage my portfolio? I'm an HNI and I'm investing a lot of money. What I propose is that I will give you a profit percentage. I'll say that, bhai, you know what, this will not make any sense, that if you are giving me a big part of your profit, it will just not add up. It's a pretty much bad deal for you. So he insisted that, you know what, Akshat, no, I'm going to make it worth your while. I'm going to give you 25% of my profit. Now, if you give me 25% of your profit, what money are you going to make? Yes, maybe 2-3 years, you'll be very happy with the type of growth that I'm helping you generate. You'll be super elated. You'll give me 25% of your profits. But markets are cyclical. They will come down, and the year where you are making a loss, all your profits will be wiped out because you have given me 25% commission from your profit years. So please be very considerate about the commissions that you are giving. I do run a stock market course. If you do want to learn about stock investing, you can definitely come and check it out. The response has been amazing. The community that we have built, it is helping each other, and it warms my heart to see all these interesting discussions happening. So definitely do give it a go. All right, so final point or the modern day money trap is that please avoid premium or premium services in majority of the cases, and please buy older model of things. A classic case in point is the debate between buying iPhone 14 Pro right now and iPhone 13 Pro. Now, I don't know the minor differences. I'm not a techie and I do not analyze these gadgets to its bones, but I'm a finance guy and I can tell you that you are at least going to get like a 30,000-40,000 rupee difference between these two. And one of the prime reasons that it happens is that tech becomes outdated fairly fast. So the new tech that is coming in the market, they will charge you extensive premium on that tech, and the older tech which is good enough, they are going to discount it. So always try to buy a T-1 model that is there in the market. It will give you a better ROI without impacting your pocket as much. This is applicable to literally everything. For example, when you go to McDonald's, you would have seen that they give you chocolate mix world. So that comes out to be like 22, 23, 25 something, not too expensive. But the same ice cream, when it is put in a cup, a brownie is attached to it, it will cost you like 80, 90 rupees. So there is a massive premium that happens. So please use a little bit of brain. Please do not buy the most premium plans. So I hope that all these techniques are going to allow you to grow your wealth and track your wealth really, really well. And I can assure you that you will become richer than 99% if you just simply avoid these traps and execute some of the key lessons that I have tried to share through this video.